Can you tell me exactly what annual percentage rate you're currently earning in your 401k or IRA? If you're unsure, you're in the majority of Americans who earn an average of 3 to 4% at most. And if you're not earning between 9 and 12%, well, be prepared to be enlightened and encouraged to take control of this enormous earning potential in your retirement account. Hi, I'm Tia, a safe IRA real estate investor and your advocate during this educational video. Let's find out how safe IRA investments can help you double your funds in just a few short years. What is safe IRA investments?
Safe IRA Investments is a passive way for investors to invest their money through real estate and receive a 9 to 12% return.
And they can do that inside their IRA or outside their IRA.
9 to 12% returns.
That's correct.
Some people aren't going to believe that.
I know. We'd invite them down here to take a look. Look where we are. We don't want to be any other place.
So basically, you find it, buy it, fix it, resell it, finance it, and you let investors take advantage of that.
Absolutely.
Gaining 12%.
That's correct. And how that helps us out, because we've had several investors, well, why would you want to give up a 12% return? And we tell them, which is the truth, is we could then take our money out of that investment and then go buy, fix, and sell another property. So it's actually advantageous for us to take our money out of 12% and buy and fix and sell another property.
Everyone benefits. The buyer benefits to buy a house they couldn't buy with the owner financing. The investor gets a great return that they want. And then we get to take our money and turn it and use it again to buy another opportunity for another buyer to buy.
So you're giving people an opportunity to be homeowners
That otherwise couldn't. Yeah, traditional bank financing doesn't work for them.
What makes this type of investment safe, and is it legal?
It is safe and it is legal. What makes it safe is that, in this case, your investments, you actually own that investment. So you get the deed to that investment. It's not like where a stock or a bond that you would invest it with a broker and then they invest your money. When you invest it, you don't really invest it with us, you invest it right into the property. You get deed to that property. So that will show you security.
Yeah, there is no pooling. There is no pooling of interest, pooling of money for any securitization. There's no securitization whatsoever in the financial terminology. You're actually buying the deed to that property, and it has a contract to deed for a buyer that is buying that. So you have complete control and fully collateralized investment.
An example would be, a great example I like to explain to a lot of the buyers, is it's like when you buy a car. When you get financing on a car, when do you get the title? You get the title when it's paid off. And it's the same situation for the buyers on this on their properties. So when they buy the house, they're going to get the title when it's done. In the meantime, our investors are going to hold that title as security for that investment.
Say I have $100,000. Can you give me a scenario of how that would work and what my return would be?
Sure. We'll use the $100,000 scenario as the purchase price for the home. On a purchase price for a home that's $100,000, the buyer, who the home is being sold to, under contract to deed, would be required to put 20% down, a minimum of 20% down. So that would leave an $80,000 mortgage, but it's really not a mortgage because it's a contract for deed. It would be an $80,000 balance that borrower would have to pay off over time. And the terms of those are between 9 and 12%, and for sake of example, we'll use 12% on an $80,000 mortgage that is paid monthly would be $800 a month that would hit your account. And if it was in your retirement account or IRA account, that $800 would go back into your account every month.
Once I take a look at my retirement account, and I'm realizing, which I realize,
Right.
hey, I'm flat.
Right.
Nothing's been happening for me. So I realize I'm not getting this type of return, and I want to look into investing in real estate.
Sure.
What else do I need to think about?
You just have to see where your account is, what custodian you have it with, and then you need to put it with a self-directed custodian. So that's the first step in any of the transactions, because in order for you to invest in real estate, it has to be with a self-directed custodian, what they call a self-directed IRA.
And then after I look at making sure that I have a self-directed IRA, then I can then look at the property that I need to invest in.
That's right. Well, Jed or I will show you, we can show you which properties that fit your needs and what you're looking for, the amount you have to invest. So you'll call us, and then we'll be able to help you decide on what one you'd like to choose. Again, the investor gets to choose because certain investors like certain things, so, and comfortable with certain situations. So they need to call us and we can help walk it through that investment.
Great. You have a great excuse to come to Florida now.
That's right.
If you don't have an excuse, I just gave you one right there.
You heard the terms self-directed IRA and custodian from Pat and Judd. Next, real estate attorney Mark Payne explains those terms in just a little more depth, and he reveals why IRA real estate investing is somewhat of a secret.
It's about a $10 trillion industry, which is obviously huge, and all the retirement funds put together. And only about 3% of that is self-directed. So the 97% that is with traditional banks earning 1% on CDs or with stockbrokers, those people do not want to let go of that income they earn from fees and commissions. And so I think that's just a part of it. But I think it's changing more and more. You're reading in Fortune magazine and other mainstream publications about self-directed IRAs. I think it's huge, especially for the smaller investor necessarily that doesn't have their own stockbroker or money wealth manager. For instance, if you take $5,000 and you invest it or you contribute it to a Roth IRA this year, you will pay tax. Let's say your effective rate is 20%. So you'll pay a tax this year of $1,000 on that $5,000. But if over the next 20 or 30 years that $5,000 grows to $500,000, that $495,000 gain will not be taxed when you take it out. Zero. So you pay tax. Would you rather pay tax on the seed of $5,000 or tax on the harvest of $500,000? Obviously, you pay tax on the seed. Because the regulations for retirement funds require every IRA, 401k account, every pension plan to have a custodian. And that custodian basically is there to make sure that the rules are followed with respect to where you can and can't invest in your retirement funds. You know, I don't want to use any names, but there are people out there that they'll even say you can self-direct. But what they call self-directing is within their small family of funds. You can pick any of these 3 or 4 funds you want. Well, can I invest in real estate? No. Well, why not? Well, because we don't do real estate. Because they don't make money. That's just not what they do. So that's the main focus. So there are not that many custodians that actually will allow you to invest in real estate, but it's not because it's prohibited. It's just because they don't make money doing that, in my opinion. Perfect. That if I were an investor just getting started, and I was thinking about self-directing, and it is number one, it's not hard. It's just as easy to call a self-directed custodian and have them roll over my funds from wherever they're at, from whoever has my IRA now. It's exactly the same. It's very simple. Number two is that it's a great time to get in real estate. We're in Florida, but it's pretty much the same all over the country. We went down in 2007. I think when we look back, 2012 is going to be the next beginning of the next hurdle, and it's going to be going for 10 years, in my opinion. I've been in Florida, since 1985 as an attorney, and investing in real estate since 1985 here. Whether you do it on your own or whether you partner with someone like Safe IRA, who has a track record of investing in real estate in Florida, that's up to you. But I think you need to take a look with your retirement accounts at investing in real estate. Number three, you don't really have a choice. And what I mean by that is, if you look at the big picture, the number of true pension plans, i.e. defined benefit plans, where you get the same payout for the rest of your life. Only 8% of employers offer those now, and almost all of those are in the public sector. Everybody else, you're on your own. So you better take care, you better take responsibility for your retirement. You need to, and in my opinion, that would include self-directing my IRA or my 401k so that I understood exactly what I was earning on a monthly, weekly, yearly basis, so that when the time came that I could no longer work. Look, the average Social Security benefit, do I think Social Security will be there in 20 years? Sure. Okay, but the average benefit is $1,000 a month. So if you don't want to live on $1,000 a month, you better take care of your retirement. And I think part of that would include taking responsibility for yourself, making your decisions, and self-directing.
Now, before wrapping up, I'd like to introduce you to a couple of clients of Safe IRA, a Super Bowl champion and a retired couple. Let's listen to their experience.
I didn't so much invest in Safe IRA to begin with as I invested in the people that run Safe IRA, because they are great people, great family guys, and if you get an opportunity to meet them, you realize these are safe guys that make it a point to fully explain everything they have to offer with the company. But as they've taught me to follow and track not only my IRA with Safe IRA, but I compare that with my NFL 401k, which if I had an opportunity, I would transfer over to Safe IRA because based on the collective bargaining agreement, it has to be managed by the NFL properties. But they've outperformed since I've been investing with them.
Well, we'd like to keep making money.
I mean, we were invested in the stock market, and the stock market
That wasn't
was
good.
not the place to be. Bricks and mortar have always been something that has worked well. I like something that's tangible, that you can touch, you can feel it, you can go look at it, as opposed to a piece of paper or a mailing that you get.
And we're just having a great life, really.
A little bit of travel, local travel, nothing
yeah.
major. We play cards. We like to play
we-
cards together.
Oh, sure.
You have options to self-direct your retirement accounts with real estate investments that are safe, secure, and collateralized. The short window of opportunity lies before you. Now, I personally invested just a year ago, and I only wish that I would have taken this action 5 years ago, because I could have doubled my IRA by now. Here's a final thought that I'd like to leave you with.
If you're not getting at least between a 9 and 12% return on any or all accounts, you need to call us up, because we can help you do that and achieve that. If you're not getting those returns, you're doing yourself a disservice. That's your money, that's your family's money, that's your future. So please call us up. You'll be helping us, you'll be helping yourself.